During COVID-19, there was an increased demand in the housing market and a reduction of supplies. Andrea Wilson is here to provide us an insight into today's real estate market and provide tips on purchasing your next home. Hello.
Hi.
Thanks for joining us today.
Thanks for having me.
Yes, so glad to have you. This has been such a crazy year and such a up and down market. I cannot wait to dive in and just learn some tips from you today.
Absolutely.
So before we get into all that, tell me about yourself and how you develop your passion for real estate.
Ooh, like an open book here. Huh? So I have been licensed now for about 15 years in the business.
Okay.
Started out like every other agent, took the courses here locally, took the state exam. Prior to real estate, my background is actually accounting. I used to do corporate accounting for many years. Found that really wasn't my thing. I'm more of a people person. And so real estate, I always had a passion for real estate because the investment side of it. I always looked and felt that was a wealth building opportunity for me. And then through talking to my husband, he also had a passion or wanted to invest in real estate. And then got my license and just started diving in. And then we opened our own brokerage now. It's been 7 years of just us kind of doing our own thing. Now we have a brokerage, we have agents there, we teach people how to invest, and we also have a construction company.
Awesome. So how did the pandemic affect your business?
Well, I would say starting out, like definitely all of 2020 was like a roller coaster. We didn't know, it was like filled with so many different emotions along the way.
Yeah.
So when the pandemic first hit, like many other businesses, we didn't know what to expect or how it was going to impact the real estate industry. And probably around March, April-ish, when we see the market shut down, it was like gloom and doom. They were like, the market's gonna fall out, people are gonna lose their home, foreclosures. And so the one thing that I think helped our industry is that the governor for the state of Ohio deemed real estate agents as a what do you call it? Essential.
Yes.
Deemed us as essential workers. So because that happened, that allowed us to still go out and show houses with precautions. We still wore masks, we were wearing gloves, we were able to interact with our clients. So then it created this market. People were still buying, people were still shopping for houses.
Like crazy.
So the market started going crazy. Interest rates were like all-time low. And then our next wave that we had to deal with was a shortage of inventory. So it created this frenzy of buyers wanting to buy, plenty of time to shop because they were at home. And so once people started to realize like, okay, we're gonna still maneuver, we're still gonna have our jobs at the end of this, it pushed buyers out in the market, but then sellers became afraid to list their home for sale. So we created this huge buyer demand, which increased the home prices, and that's what we're seeing today.
How would you describe the market today?
So the market today is, it's interesting. So I've been licensed for 15 years, and this is the first market that I've seen this way, right? We have low interest rate, which creates a buyer's market, right? But we have low inventory, which is also creating a seller's market, right? So because when you look at city to city, you know, communities are happy because they're finally starting to see the home values recover in the marketplace, right? But I do feel that the market is somewhat inflated. We literally have buyers so eager to get into a home. They're writing offers for 20, 30, I had one the other day, $49,000 over asking price, and it was accepted that way. So $49,000.
So do you encourage situations like that?
No.
Do you push it?
So what I will say is this: there's a lot of things happening in the marketplace. One of those things, agents or some individuals in the marketplace are encouraging people, to not have a home inspection on the home. The reason being, they want to put the least amount of contingencies into the contracts. I will never recommend to my client to not have a home inspection.
Okay.
That home inspector is going to come out and check from the foundation to the attic of any particular home. So we want to find out that you're buying the best home. You don't want to move in and uncover all of these things. If you don't get that house, then it's just not the house for you. It will eventually come. You just have to be a little more patient. The second thing is with these over asking price. So whatever agent that you're working with, you want to make sure that they are providing you with the numbers to show that the value is there. If the home is only worth $150,000, but you have to write in, another $20,000 into that contract, is the value there to support that? And you never want to get into a situation where you have the highest or you paid the most in the community. So do your due diligence, make your agent work for their commission check and break those numbers down for you so you know that you're buying within reason.
Really great advice. This is taking me back. So when I purchased a home 6 years ago, I purchased from a sold by owner, but the owner was so adamant about their price that they wanted in their head, as opposed to what the market supported. So I can definitely relate, and it's just bringing back so many unwanted memories. Right. So do you recommend even buying in the market right now?
I do.
Okay.
And the reason why I do, I know you probably like, well, you're an agent, of course you're going to say that, but no. Honestly, the reason why is we don't know what tomorrow is going to bring, right? So the interest rates are still really low right now. So the price point, it's going to be, the price point of houses we know is not going to tank, right? Over time, we know that value of real estate over time increases no matter what.
Absolutely, yeah.
The worst thing that you want to happen is for interest rates to shoot back up. If interest rate shoots up, the price point of houses are at an all-time high. That's going to increase your monthly payment. So at minimum, you're still going to get a good value. Buy now while the interest rates are still low, and you can have more house than paying it into, the interest or giving the bank more money.
I like that. Okay. So taking it back to some of the first steps you need to do a part of the home buyer process. So what makes a pre-approval so important?
The pre-approval is very important. It primarily identifies two things. The first thing is that approval amount that you have been approved for. So now you know how much of a home that you can afford. The thing to remember, though, about that pre-approval is that the bank or that lender is going to approve you on pre-tax dollars, right? We live off of our net income. So you never want to get into a situation of them approving you for $200,000 based on your gross and not your net. So you want to make sure that you're purchasing a home within your budget, what you're used to. So not this dramatic increase of monthly payments. So the first thing, that pre-approval is going to let us know how much you get approved for and that you're comfortable with that amount. The second thing it's going to tell us is the type of loan that you've been approved for, right? So there's two basic type of loans. Either you're like a first-time home buyer and you would go with the FHA product that allows for 3.5% down. It's not 20%. Everyone thinks it's still 20%, but it's not 20%. The second most common type of loan is going to be your conventional loan. The big difference between the two is going to be your score. Your conventional is always going to be your best option if you're in position to do that, because it's going to offer a better interest rate for you as a buyer. But not everyone can do that, or they don't have the savings. So you may need to go FHA, where you can put that lower down payment amount out there.
And what kind of credit score are we talking for both type of loans?
So with a FHA loan, the guidelines say 480, but reality, I'm always going to give you what reality. And so your score really needs to be about a 620. Right? I'm going to add one thing in there. If you're looking for down payment assistance.
I was going to get to that.
Your score needs to be about a 650 for down payment assistance.
And we'll jump into some more details about that, some recommendations and tips a little later.
And then the third thing is for your conventional is going to be about a 680 credit score.
When do you recommend getting a pre-approval?
Well, For a lot of buyers, they may be renting somewhere. So you definitely want to be well before the 30 days that you have to give notice to your landlord.
Okay.
Right? So most landlords, you have to give a 30-day notice. If you are someone that follows your credit, right? We all have apps like Credit Karma.
Yes.
It's so easy to use. The one thing that I want to mention about Credit Karma is that's an advantage score, and lenders use a FICO scoring model on there. So the Credit Karma gives a good indication to where you're at in the process, but we really want to make sure we're looking at that FICO model. So if you believe or know that your score is already in like the 700, you're already in the 700 club, then you can start looking for that pre-approval about 90 days before. Your pre-approval is going to last for about 90 days. If your score is much lower than the 700, then you want to do 6 to 9 months in advance. Not for the pre-approval necessarily or per se, because it won't last. Your pre-approval is only good for 90 days. But if we need to work on your credit, we're going to need the time to get you in position to be mortgage ready.
Okay. So today, my guest is Andrea Wilson. She's here to talk about the crazy up and down of the real estate market and provide us tips on navigating and getting our first home. So let's talk credit score. You dived into it a little bit before we had to take a break, but what are some tips for someone who don't have the best credit?
Oh my goodness. First, let me say this. There is free help for you. There is free help. Absolutely. Okay. FREE. There's free help for you. A lot of people don't realize that our government actually wants to help encourage home ownership, right? So there are what's called HUD-approved housing agencies that are out there. They're across the country, so no matter where you're at, you want to go to HUD.gov. HUD.gov, you can look for a HUD-approved housing agency.
Oh, okay.
Through those agencies, they will help you become mortgage ready by pulling your credit, writing action plans for you to get on track to home ownership. So don't think that you need to pay some credit repair company thousands of dollars or a monthly fee to help get you on track. That's not needed. You want to contact a HUD-approved housing agency. They will also take you through the entire home buyer process. So that's the first thing. Secondly, don't get discouraged no matter what. If you're in the 400 clubs, 500 clubs, don't get discouraged and think that you can't purchase a home. It just may not be today, but if it just takes a little focus, energy, and concentration on it. And if you work towards it and you have a little help, you'll get it done.
Okay. I like that. Give hope, because a lot of people I know, especially like family and friends, get so discouraged, like feeling like they're never going to get it. I see them get into the housing market. To purchase one is crazy right now, but the supply of rental property that's out now is also in high demand and a short supply. My brother, he has a moving company, and he said he's moving like half of his people property into, or their actual content of their home into storage facilities because they can't find homes. So great tips, way to like really give people hope into this process. But can you tell me, or our viewers today, how do a interest rate relate to your credit score?
So obviously the higher your credit score, the better interest rate that you can afford. And your interest rate could impact you as much as moving into a $100,000 home or a $200,000 home. Everyone is in a different position, or your score is in a different place, right? Or your monthly debts that you currently owe on there. So that all plays a part as to what that approval amount, will end up being. But your credit score is very important. And I think a lot of times people are so afraid of just looking at that score.
Oh my God.
They don't want to peek because they're afraid of what they'll uncover by looking at their score. What I find is that a lot of times it's not even as bad as you think it is. It just needed a little extra push. You have a credit card, your limits are too high on that credit card. If we just bring or pay down those balances, your score will boost. It takes between 30 to 60 days, even 90 days sometimes for your score to improve, like even when you pay down something just because of the way that the bureaus report. But again, just talking to someone, helping them hold your hand through that process. You just talked about rentals, right? A lot of times the rent that you pay is much higher than what the mortgage would be on the home. And people don't realize that. You are paying your landlord's family to help build wealth for them. You're not building wealth for yourself. And we have to get back to a point where we value home ownership. That's the way that many people were able to start businesses for themselves, get their kids to college, planning for retirement. You can't do that if you don't own the real estate.
I agree 100%, 100%. So what are some things that people can do to help them qualify for a mortgage?
So some of those things is, I got a couple tips on this.
Okay.
So when you apply for a mortgage or apply for a loan, that lender is going to ask for some documentation from you. One of those things is going to be your bank statements. And I'm going to give you guys a tip. With those bank statements, right? We all know about Amazon. We love shopping at Amazon. Target is another big one. For whatever reason, everyone loves shopping at Target. Well, I
blame social media.
Right. Right. And Uber Eats and all of that. And that's another one that's on there too. So the loan officer is going to ask for those bank statements. The biggest thing is we don't want to give the loan officer more information than he asked for, right?
Okay.
The loan officer is only concerned with your income that's coming in, your paychecks that are being deposited into your account. Consider opening up another bank account, right? So you have a bank account where all of your direct deposits, assuming it's direct deposit, or you cash your check from your payroll, go into there, all cash coming in, right? You have a separate account that's more like your spend account. Through that spend account, that's where you do all your shopping, your Amazon. Keep that away because the documents are going to an underwriter. That's frustrating for them to have to dig through all of this mess to get the information that they need. So we want to keep it as clean as possible. The second thing is, if you're thinking about buying a home, keep that same job. You want to stay in employment. The lender is looking for a 2-year work history.
Okay.
Right? They want to see 2 years of consistent history. So I'm sorry to tell you, if you want to change jobs, don't do it until you have keys in hand before you do that.
Because a lot of people, this is their time where they're taking a break. COVID has impacted so many different things, especially like with millennials and just leaving the job market. So I'm so glad that you talked about that. So what are some other tips?
Some of the other things that you're going to do, the lender is also going to look at obviously your credit score.
Okay.
So take a look at your credit score ahead of time as well and really identify and know where you're at in the process. If you can look at your credit report, going to annualcreditreport.com, you're able to pull your credit report from all 3 bureaus for free. Go ahead and take some time, review that ahead of time, and just remove any items or inquire. If something's not supposed to be on there, then we need to contact those bureaus to get those removed off of there.
Okay.
And for the folks that maybe work in the service industry and you have tips, cash, the lenders do not like seeing cash. They don't want to see mattress money or anything like that. So making sure or having your employer maybe direct deposit that into your account or at least consistently putting the money into your account. You don't want to have like $5,000 stashed into at home and then you just deposit that into your bank account. That raises red flags for them.
Okay. And
then my last tip that I'll give here today is co-signers, right?
Okay.
Stay away from co-signing from people. It doesn't matter if it's the craziest stories I've seen. One of them, quick here, is that I've seen a daughter co-sign for her mother an apartment, and the mother defaulted on the apartment, and so then she had a judgment placed on her for like $17,000. So we would like to think that our family loves us and they wouldn't do that,
but
Help in another way. Give them the cash than rather being a co-signer for them. So stay away from that.
Okay. Oof. See these memories, they're just popping back up. Oh, memories that I don't want. Okay, so let's jump back to earlier you mentioned down payment assistant programs. When I was going through my home buying process, I struggled finding options in Ohio. So can you give us some tips on programs that we actually can qualify for?
Absolutely.
Okay.
So the easiest way that I'll break this down so you know that I'll say this, there is money out there. There's money at a state level, county level, city level, right? And I'll explain the biggest difference. Even your local banks, wherever you bank out, they probably have some sort of down payment assistance program. Now, how much each program gives, that varies, right? If you're looking at a lot of the county or city down payment assistance money, they typically run out of money by like February or March because they may have received a grant for $50,000, and when it's gone until maybe the new year.
So do they receive, normally they receive the money at the beginning of the year?
Usually, typically, it's going to be at the beginning of the year. So if you're like right now looking for down payment money from a city, it may be already gone at that point. So that's the first thing. The thing to remember or to know about working with banks, right? So a lot of your banks that you do your everyday banking at, they have what's called a CRA requirement. So that means they are required, because they take money from the government, they are required to do so many low to moderate income loans within the community, right? So because they are taking low to moderate income loans, they will also say that you have to live in a low to moderate income area, right? Not a problem if you planned on living in a low to moderate income, but you may not want to move to a low to moderate income. And when we look at communities, even Twinsburg, Bedford, all of these areas have a footprint within the community that they have deemed as low to moderate income. Again, great, no problem if you don't mind or you plan to move in that particular area of the community. But what if you don't? What do you do now, right? That's where we need to look at the state money. Right? So this is going to be the main difference if you're talking about your local banks. That program may not work for you. The state money is great. The state money covers the entire state of Ohio, and you can move anywhere within the state of Ohio. Now, if you happen to move to a low to moderate income area within the state, then there's some additional incentives.
How do you find those incentives?
Well, the state is run through OFA, Ohio Housing Finance Agency, is where the state funds are gone through, right? So you can go to the OFA website and look up and type in your zip code, but they cover the state of Ohio, right? The biggest thing, though, with a lot of the programs as well, to remember that these are when they complete it, it's kind of like it looks like a second loan that's going on there, right? So it'll cover like that full 3.5%, your down payment portion of it. But the way that they write it is it's a forgivable loan. So you'll see it because it'll show in your loan documents because it'll show as a forgivable loan. So what they do is it's a 7-year program, right? So as long as you're staying at home for this 7 years, it will get completely wiped out. You don't have to worry about it. But if you were to move before the 7 years, then you would be required to pay that back. If you went FHA, $100,000 loan, a down payment is 3.5%, so $3,500. So they would give you the down payment of $3,500. But if you move before the 7 years, then you would be required to pay the $3,500 back, which is really not it's not a crazy amount, right? And the way that the values of homes, it may get absorbed in that anyway because values have increased.
I know you're a broker, but you also play the realtor role. What is some tips on finding a perfect realtor?
Asking questions, looking for a referral for other folks. Right now, I would say I believe it's very important that you work with, even though I have part-time agents, so don't kill me. But I definitely think right now you need your agent to have flexible time, right? Like a full-time agent, because the way homes are like popping on the market right now, and they're flying off the shelf.
And they leave next time you refresh the page.
Exactly. that you really need someone that can go out to the property almost as soon as you can get in there. It's, you know, so the days of seeing a property online on Monday and planning to go out on Saturday is kind of over right now. We're literally going to see 1 and 2 houses at a time. That's just the way the market is. So you want one that is has the time to really work with you. The second thing, one that is resourceful, right?
Okay.
You know, making sure that they can connect you with the best lenders, the best home inspectors, someone that's going to give you sound advice, that's more concerned about, you know, you and your family well-being than a paycheck.
Okay. So how can our viewers learn more about your brokerage, real estate, and just overall knowledge you provide on social media?
So I'm on Facebook.
Okay.
You can find us at our name of our brokerage is Brickhouse Realty. You can find us at Brickhouse Realty on Facebook. I'm on Instagram. You can find me at she's_a_brickhouse.
Okay.
On there, I'm always providing content, information, tips. I love educating my clients or just the community as a whole. So that's what you'll find. You won't find any crazy.
Yes, and I love that about you. Yes, that's what drew me in.
Okay.
Yes, yes. Well, today my guest, Andrea Wilson, joined us on Forum 360, where we have a global outlook from a local view. I want to thank her, and I'm glad she came to provide us some tips on purchasing our next home after such a crazy up and down year. Thank you for joining us.
Thank you again for having me.
Forum 360 is brought to you by John S. and James L. Knight Foundation, the Akron Community Foundation, Hudson Community Television, the Rubber City Radio Group, Shaw Jewish Community Center of Akron, Blue Green, Electric Impulse Communications, and Forum 360 supporters.